Hello, everyone. This is Tyler Ford here, Tucson, Arizona with eXp Realty. And today I've got a very special guest and excited to do this, doing a live with Trevor Mauch. He's been one of my mentors and a big reason as to a lot of my success in real estate. And we've got Brady with Carrot. He's the content strategist. And welcome, guys. Thanks for coming on.
Thanks,
Tyler, dude,
Tyler.
I'm pumped to be on your live stream this time. And I watched your introduction. I'm going, dude, Tyler's got his stuff together. This looks amazing.
Well,
I'm
I had
honored
to
to
up
be
my
here.
game for you. I've been preparing, so it looks good because all
I
your
love
stuff
it.
looks awesome. So I had to do the same.
I love it, buddy. Thanks for the invite. And as always, Brady, like anything that looks awesome on our side, it's Braden in the design team. But Brady's been my partner on the content side big time, and it's been fun seeing you guys work together on some stuff too.
Yeah, you guys do a great job. The quality of what you put out is awesome, and that's why I'm honored to have you on. This is my first live with a guest, so I appreciate it.
Cool.
So yeah, little introduction. I'm on the Carrot platform. Trevor is the founder and CEO of Carrot, and Carrot is an awesome platform for real estate investors and realtors where basically you can be up and running within seconds and have a very professional website that's going to perform and generate organic, evergreen leads, whether you're an agent looking for buyer or seller leads, or you're a real estate investor wanting to help sellers provide an option to be able to sell a home quickly on their terms for cash. So depending on, I'm more of a hybrid agent where I do both. And that's how I bumped into Trevor and joined the Carrot community, and been loving it ever since. And one of the things I do my market update, and I've got a really good handle on the Tucson market, and I really love diving into the numbers and providing value here locally in Tucson. And the reason I've got Trevor on the call or on this live is that Trevor, in my opinion, and I could be wrong, next to Zillow, realtor.com, they generate a ton of leads for all their clients, and they've got the analytics behind the scene in order to be able to see all that data. So I've got this gut feeling that Trevor and Carrot, they've got a really good understanding and feeling of the market more on a US, on a bigger scale than what I'm providing for my clients. So that's the reason to this live. We're going to do the state of the housing market and just kind of get Trevor's thoughts in terms of which way this market is heading.
Cool.
So with that, so give us kind of a breakdown, like what you've seen behind the scenes with Carrot pre-COVID, COVID, and then where we are right now and where we're headed with this market.
Yeah, Tyler, the biggest thing for me, and kind of give some extra context for any of you guys and gals watching this, is we work with just shy of 8,000 real estate investors and agents across America. And these are people that are buying homes, directly. So if you look at how Zillow used to buy houses or Open Door or OfferPad, well, we work with about 8,000 people, give or take, that do that directly and at the mom and pop level, all the way up to buying 400 or 500 houses a year. And then we work with a lot of real estate agents as well, or what Tyler called hybrids when you're doing both, right? And so that's spread across about 13,000 websites that are going out there ranking on Google for house sellers, for house buyers, tenants, everything. And you bring in millions of leads over a period of courses of years, about 500,000 opt-in leads a year, and probably about that same amount of phone call leads. So it's a significant amount of people in every single market that you can think of in America, and even the primary markets in Canada, South Africa, and Australia. And so we have a broad set of data. And the thing that's unique about the data that we have, Tyler, and I'm going to go like way macro first, and then we'll kind of drill down and see what's useful for people to dig out. But at the macro level, outside of Carrot and the data that we have, we're definitely in a really interesting spot. 2 or 3 years ago, let's say 4 years ago, in my podcast, I was talking about, hey guys, we're nearing the end of the cycle, right? Cycles usually go 8 to 10, 8 to 12 years, and there's usually some sort of a reset that happens. Now, it's not always a crash, but there's usually some sort of a reset. Things cool down, they pull back a little bit. In 2008, we happened to have a big crash because fundamentally, there were some not good, healthy fundamentals in the real estate market, the mortgage side of things, the whole thing. Okay. So it got way overheated from non-natural forces, and then things broke and they took a while to rebuild. Now, when they rebuilt, they caught fire big time, and they just kept on going and going and going. And so for years, I've been saying we're due for a correction, due for a correction. COVID hit. I think the majority of people, I'm sure there were some really smart people out there that didn't think this, but the majority of people thought, oh my gosh, how is this going to impact real estate in a negative way, right? Are people going to stop wanting to buy houses because of this pandemic stuff? And we're at the end of that economic cycle, both in real estate and stock market. Something's got to happen. Everything's going to start to go downhill because of this trigger. And so a lot of us started to kind of pull back and tighten up our businesses, make sure that we're fiscally responsible at home and at work. And it did the opposite, right? Exactly. We've all seen that. It got even hotter. And I'll kind of break down some of the things that many of you already know likely, but then I'll break down some things that might be new to you. So during that time period, what we saw, and I'll do a quick little screen share here, Tyler, that might be useful to kind of like show timeline of what we saw with our unique data. Then I'll give some macro insights too. But let me see there. This right here is inside of our data system with the 13,000 real estate websites across the country. Most of this traffic are sellers. Okay, these are mostly people looking to sell. I've got some other data that's buyer data, both on the agency and the retail side and the wholesale side. I'll dig into here in a second. But what you saw happen right here, and I spanned it out, a couple of years, so it's getting kind of crunched together. But this is June 2020. This goes all the way back over here to February. And so what we saw happen right here, and it's very hard because I've got this spread out over a 2-year period, as you see, March 2nd is right there. So the market was actually kind of starting to trend up into the spring, which normally happens. More people go to the internet to search to sell and to buy in the springtime. But what happened this time was abnormal. Is COVID hit right there on the start of March, and then things took a dive on the search traffic side of things. It was about 20% for a period of 2 weeks. People kind of held on and said, what do I do, right? Can I sell my house? Can I buy a house? And that's where a lot of panic came in. A lot of people got scared. What happened, though, then is it actually increased after that. Okay, that initial pullback and being scared, people increased. More people went to go search to sell their house or buy a house in those coming weeks and months. But over here is what's interesting is over here, the conversion or the people that were actually ready to go forward and start to buy or sell and submit their information to a website, that actually took a little bit of a dip in a pretty good way. So you can see up here was the conversion rate. So this was February 5th. As soon as COVID hit, the amount of people who would actually fill out a web form or call one of our clients, an agent or an investor, to take the next step to sell or buy plummeted by about 20%, and it stayed down. Okay. It stayed down. While this rebounded, this stayed down for pretty much the course of the next year and a half. Now, why is that? There's a couple things. Number one, during the throes of the pandemic, a lot of people wanted to sell, but they weren't sure if they could or if it's the right time. So they were exploring, but they weren't putting their house on the market because of whatever reason. They didn't want to, try to look at a house or buy a house and have to go through and walk through someone else's home and get their germs or pass them germs. They don't want to go to open houses. Like any of these reasons why they might not want to sell. They wanted to sell, but they weren't ready to, right? They were seeking out a solution, not taking action on the next step. And so then it went back up a little bit going into 2020, into the summer. It went back up a little bit, but then it started to take a little bit more of a dip. This now was the dip caused by the actual, like the market getting hotter. Okay. Your conversion rates go down on a website. And I know this isn't about websites, this is about markets, but I'm gonna give you guys context. Conversion rates go down when there's a lot more options to be able to sell your house quickly. Okay. I can list it on the market with an agent and get it sold with 20 above asking price offers. Right. And so this data shows that most highly motivated people were still filling out the forms, but a margin of people were not, because they were like, I can just go list it with my Aunt Sally, who's got a license, because it's already going to get 20 asking price offers literally just by putting it online, right? More people went to FSBO at that time because they saw the price go up. And so FSBO became pretty popular. Now, traffic over here is actually increased. So there's more people wanting to buy and sell real estate right now than there were 2 years ago. Let me go even more macro before I dive into this stuff here. So on the big time macro side, you had foreclosures being paused. So that was piling up all this foreclosure inventory. You had to where landlords could not evict tenants in many states. You had all these either pending evictions or people that weren't going to go anywhere, but landlords not collecting rent anymore, creating pressure on those landlords to where now they have to make up multiple mortgage payments and possibly getting foreclosed on those properties or sell the property retail, right? So you had these landlords who had a residential single family house not collecting rent because some of those people wouldn't do it. And their only way out of it was, oh my gosh, housing prices are going, I'm going to sell this house now. So some of that rental inventory went back to retail. But then on the flip side of it, you have hedge funds at the macro level. They see the impending issues with the stock market being really overheated and they don't see good values in the stock market anymore. So they were going, okay, where do I put money that's a good store of value and a hedge on inflation, which they saw coming? It's rental real estate. So they started buying up a ton of residential homes that were never rentals before and putting them on their rent rolls. And they're still buying up tons of homes. Like, a lot of the majority of the houses that a lot of our clients are buying, they're selling straight to hedge funds. And so where does all this go? You have hedge funds removing inventory from the market from people who would normally be purchasing a house and living in it. You have foreclosures that would normally be hitting the market that were not hitting the market for over a year and a half that would normally be gobbled up by investors to get back on the market. You have soaring costs and prices with construction that normally when there's that inventory issue, people are going to go build houses. But because of the last crash, there's fewer contractors than there were 12 years ago doing the work. Housing starts started to go up, but then the cost went up as far as materials goes. So housing starts started to go down again. That put that more downward pressure on inventory, right? And so the big upswing, guys, in housing prices this last 2 years, and this isn't new to you guys. Tyler's been talking about this, likely is inventory. It's not that there's far more people wanting to buy. It's that there's far fewer houses to buy and a lot of people wanting to buy. And so when people look at mortgage rates and go, oh my gosh, mortgage rates have gone up by X percent, we're going to start to see a softening in real estate, right? We're going to start to see housing prices go down. Well, not necessarily. I think we're still going to see housing prices in many areas go up, just not as fast, right? We're going to see housing prices in many areas start to kind of soften, but not really decline or go down. And that's because where a year ago and even 6 months ago when interest rates were way low, I'm making up a number. Let's say for every house on the market, there were 500 buyers who were qualified to buy that home and they were looking. Okay. Now, after interest rates go up, there might be one house in the market for every 300 qualified buyers, right? Maybe it knocked 200 buyers out for that particular house. There's still 300 there. And so like, it's still an inventory issue. And we're a decent away from that balance on inventory. And so I think we'll see a softening in many markets. Phoenix is one of the most overheated markets in the country, as an example. And so in a market like that, I think we will start to see softening of growth. We're not going to see 15, 20, 30% growth in those houses this next year. So don't buy on speculation. But if you're looking to sell, I do think prices in most markets will continue to go up, but not by a lot. And we're still seeing even with higher interest rates, a good quality house go on the market and above asking price offers. Anytime a house goes on market and there's multiple above asking price offers within days of the property going live, it's still a hot market. It's just not overheated like it was, and it's going to start to get a little bit cooler.
Yeah, do you think at some point, the question, I always say it's not a matter if, it's a matter of when.
Mm-hmm.
At what point will we have more of an equilibrium type of market where there is enough inventory to where it's not a seller's market? Do you think that's around the corner, or do you think we're still going to be at a point where inventory levels are still going to be low enough to where it's going to maintain being a seller's market?
Yeah, it's a good question, and I've got an opinion on it, Tyler. I don't have like hard fact here. There's other people that have hard fact in this probably.
I always bring out my crystal ball. I mean,
that's right. But yeah, from looking at the inventory numbers and housing start numbers, so in an average decade, there's, and this is a number that I believe is the accurate number, but you guys can go Google it. You'll get the idea of what I'm trying to say here. But on an average decade, it's about 8 to 10 million home starts is what happens in an average decade. In 2010 through 2020, it was about 30 to 40% less than that, maybe even half. Okay. And so we still have millions of homes that we were down as far as the traditional amount of homes that's built. Now we have populations growing. So our population in the US is not shrinking, right? It's not shrinking at all. It's still continuing to grow. And so we had 30 to 40, 30 to 50% fewer houses being built in 2010 through 2020 than there was in the previous decades before that. So we're still millions of houses in properties down. Now, this I think is where we are going to see some of that downward pressure a little bit for a period of time, Tyler, is I think, there's a big boom happening right now in multifamily. And there's a lot of multifamily and a lot of homes being turned into rentals. I think we are going to see some of that pressure, some of that demand get gobbled up by multifamily. But eventually those people are going to want to buy. And then it's going to create that pressure again. As soon as they can find that opportunity to buy, they're going to go try to buy. This is my gut. My gut is we're still at least a couple years out, 2-3 years out before like the real equilibrium can happen. Because we've got to see some of the costs with home building going down a little bit and softening, which we have seen that go down a little bit in some of the areas like timber, but then it goes back up and it goes back down. But now we have other things that are happening, like with the Russia Ukraine issue causing gas issues. There's all these dynamics, guys, that are happening to increase inflation, which makes everything around building a house more expensive. So I think we're years away from real equilibrium happening and making it to where people put a house on the market and it stays on the market for 90 days, right? I think we're a ways from that. Yep. But that's the challenge, y'all. That's the challenge.
And you said something, and I've talked about it. Not many people talk about it, but I read an article that 25 to 30% of all single family homes are being bought by investors. And the challenge with an investor buying a home to keep it as a rental is the average person stays in a home for about 5 years. So that home for an end user is going to be put back on the market and recirculated back, where an investor, when they're buying a home, their average hold time is more than double of that. And based on inflation and everything that's going on right now, if investors still continuing to buy and take that property off the market, I mean, I think that is another huge reason as to why we're having this inventory crunch that not many people talk about.
Yeah, it is for sure. And I've been kind of diving into this topic a good bit, just really thinking about like what is going to happen in the market moving forward. What's going to happen in 7, 8, 9 years, 6, 7, 8, 9 years when those hedge funds sell, because eventually they will, right? Hedge funds are not in business to hold assets for a decade or forever, right? They're just not. Hedge funds hold assets to go through the next cycle until they see the better opportunity with the next asset, right? And so what I think is going to happen is hedge funds are still piling in buying tons of properties right now in many markets. But here's the thing, they're not buying in lots of markets. Like Richmond, Virginia, they're not buying in Richmond, Virginia at scale or at all. They're buying in Phoenix, they're buying in Louisville, they're buying in a bunch of markets, but the majority of markets hedge funds are not buying in. So if we look in Roseburg, Oregon, right here where I am, 30,000 people in this town, hedge funds are not buying here. And so even though there is a macro trend happening with hedge funds buying, it's in less than 20 markets that the majority of that's happening in.
Yeah, that's a good point. So it's more market specific.
It's market specific for sure, but even in those other markets where they are gobbling up a lot of it, it tends to be lower price homes. So it's markets and homes where they're not buying $300,000 or $400,000 homes. So they're buying the bread and butter starter home. That's a great rental because they want to be able to pay $200,000 for a property and get their 8% return. And that's their game. Is I've got $1 million I've got to deploy. The stock market's overheated. I can't put it here right now. So now where do we put it? We're going to put it over here into real estate for the next 5 to 7 years. And we're just looking to get an 8% return. Like that's what they're doing. They're not buying at discounts at all. And that's part of also what's driving some of this up. So yeah, if you guys are in a market where hedge funds are buying up a lot of properties, then that can be an issue, but also it's opportunity, right? That's opportunity to maybe you switch to investing in multifamily. Or if you're a real estate agent, maybe you work with people who want to build multifamily or buy multifamily or something like that, because there's opportunity where they're at Roseburg right now. We have nowhere near enough housing, and there's no hedge funds buying here. So right down the road, every time I drive home, there's about 300 multifamily units being built right now. And there was a building that just finished 100 plus units a year ago. We're building a ton of multifamily units in Roseburg right now. And that's what's going to keep happening. I think you guys are going to see a lot more big multifamily pop up all over the place because big money is going there and they see the issues with inventory.
Yeah. So what's your advice? So right now, I saw the same thing. So I was getting a ton of seller leads, COVID hit, seller leads went down, buyer leads went up.
Mm-hmm.
Now I'm seeing buyer leads go down, seller leads starting to flip flop. I'm getting a feel for that. But if you're an agent out there speaking to real estate agents and you can't sell out of an empty wheelbarrow, it's like going to the grocery store and there's nothing on the shelf.
Yep.
What's your advice to agents out there in this market?
Yeah, let me share this with you, Tyler. If you pop up my screen here, I want to kind of speak to what you mentioned with the trend with leads. And once again, if you guys and gals are real estate agents watching this or investors, this is based off of over 13,000 real estate websites on our system on Carrot, across hundreds and hundreds and hundreds and hundreds and hundreds of thousands of motivated leads that come to them every year. And so this right here is motivated seller site sessions, which would be like unique searchers. This is unique people who land on a website, and conversions. So the sessions is visitors, and then the new lead is the person who became they opted in. They filled out an opt-in form. This doesn't include people who picked up the phone and called. So the actual percentage or number of leads is higher than this. It's just people who filled out a form. And so if you look back here to 2019, okay, we can see that there was 537,000 sessions or people that landed on our clients' websites. And for motivated house sellers, about 11,000. That number has gone up. And if we were to kind of look at January, you can see January, February. The data that I showed you back here, where the conversion rate took a dip when COVID happened for sellers and buyers, that's this. The conversion rate took that dip because people were looking and seeking to sell. And you can see here the traffic continued to go up. See that, Tyler? Mm-hmm. Sellers were wanting to sell still, but they weren't willing to take the next step. And if you're an agent in these phases, that means you keep marketing, right? Because demand is still there. There's an outside force stopping them from taking action on it. So when they're ready to take the action, which is happening over here, right? When they're ready to take the action, the person who stayed in front of them with their marketing, with their content, with their trust is the one who won that business a year later. Okay. And so that's exactly what we were telling people right when COVID hit. We were doubling down on it. Keep your marketing going, stay in front of people, keep putting out content like Tyler's doing to build trust, because eventually those people who are searching will want to sell and buy, and they'll take action on it. And that's what started to happen right around here, Tyler. January 2021, things started to unlock a little bit more. Mm-hmm. And we consistently saw conversion rates go up, and it has taken a bigger spike. Conversion rates always go down around holidays. So that's what you see here. November, December, they go down, and then they spike back up bigger than ever. Traffic, though, like you're saying, now traffic has started to level out. Let's go down to agent websites specifically. So this is motivated sellers. Okay. This over here is an agent buyer focused website. Some of these leads could be sellers, but it's buyer focused. It's climbing. COVID hit, both of them took a dip, and they're pretty much following a similar trend. But now we're seeing the trend of searches go down a little bit on the buyer side, and then we're seeing conversion rates go up. So what this tells us, same thing, is people have been searching for a while, but now people are seeing changes in the market. They're going, I got to get in and get something happening here. Like, I've got to take some action now. So the agents and investors who are getting rewarded here are the ones who have been in front of those people with content. They're the ones who have built that trust and credibility. Let's go down here now, Tyler.
And I agree. I mean, if it loosens up a bit, one of the challenges is that I've seen with a lot of clients is that they do want to sell, but they don't have any place to go.
Yep.
And if it loosens up a little bit, that will definitely help.
Yeah. And here's a site mainly focused on sellers. This is hundreds of leads, 874 seller leads in that month there. So this here, once again, searches were going up. COVID got hit. COVID hit both of them took a little bit of a dip, but in general, the sellers, the searches have been pretty consistent on the retail side. They grew right here, of course, because around that time, that's when housing prices were starting to go up and COVID was unlocking a little bit. And sellers are going, oh my gosh, I got to capitalize on this housing market. It can't go on forever. So more and more we're searching, but that searching has leveled off. A good hunk of it is because we're talking to sellers and talking to agents, and they're like, well, some sellers aren't selling because they don't think there's a house to buy, right? And so that's an opportunity right there for agents. If for agents that are watching this, or if you're a house seller or a house buyer, there will be inventory that will be unlocking over the coming years. And if you are nervous about selling now, and maybe you want to go, well, should I sell now because I can't find anything to buy? I think there will be more opportunities to buy good properties over the next 2 to 4 years. The question is, will the value of your home go down by then, or will it continue to go up? I think that's market specific. If you're in a really, really hot market where the average income in that area is way outpaced by the cost of the house, I think you are in some of those markets going to see a pullback of home values by a little bit, 5, 10%, 15%, maybe 20% max in a market like a Vegas or something like that, right? We're not going to see 50% hits like we did in 2008. So I think we will see more opportunities for deals in 3, 4, 5 years. I don't think we will in a year. I think prices will only be higher in most markets in a year, but not 20% higher.
Well, that I tend to lean on more the conservative side, and I was in the middle of the last meltdown. And I mean, what I'm hearing from you think things are going to slow down. We're not going to have the major meltdown that a lot of people talk about. And the growth rate is just going to, instead of double digit year over year over the last 2 years that we've seen, it could be single digit or maybe even sideways for that matter. And it depends on the market that we're in. The market you're in. Arizona, Vegas, the ones that are been the hottest ones are the ones that tend to get hit the hardest when it does happen.
And Barking Shark on here had some comments, said really good deals in the stock market after the pullback. And that's true. So what I feel is going to happen, and this is kind of where it gets into macro stuff that's kind of geeky, and you could even say a little bit like conspiracy theoristy, but I don't think so. Most things were conspiracy theory at one time are like truth later, right? Or many of them are. And in this example here, hedge funds are moving capital over to real estate because it's a hedge on inflation, and they can put in their $1 billion and get their 8% returns with very, very good consistency. And they're actually helping to prop up the real estate market because they're buying so much. And so they actually have some hand in being able to keep prices high because they're paying high prices and they're yanking inventory off. So when they're ready to sell, they've done their math. Their houses are going to be worth at least what they're worth now, if not more. Okay. And so the question is, when are they going to sell? Well, they're going to sell, I feel, when there's big deals and value back in the stock market and back in equities, because that's where their growth comes from. They're not looking at their big growth right now in this cycle from real estate. They're looking at this as it's going to be amazing, good returns. We might get a little cherry on the cake, whatever it is, icing on the cake in 2, 3, 4, 5 years, 6 years with some equity built. But they're going to take that capital, they're going to redeploy it back into equities as soon as we have a big pullback and values are there again. And so
that's a valid point, even for real estate investors, because right now real estate is the best returning asset out there from a cash on cash and just cash flow. There's no other place to put your money.
And so then that question is, as we look at 5, 7, 8 years out, because hedge funds are not buying on a 1-year cycle. They're not buying it to hold something for 2 or 3 years. They're going to buy something to hold it for 5, 6, 7, 8 years, right? And so if we look at that, and there's a couple million plus homes that the hedge funds are going to start to sell off. They're not going to sell them all off at once. They're going to go in tranches. It'll take them years to sell them. But then we ask, who are the buyers for them, right? They're either going to put it on the market, which I think they will put some on the market for sure, but they're not going to start releasing just like hundreds of homes on these markets because it would take them years to sell them, right? Years to sell them. And also they'd also be driving down the value of the homes because they're flooding the market with inventory, which drives down the value of their investments, right? There's no incentive for them to put them on the retail market and sell them all at once. And so we go, okay, they are going to be putting some of it back in the market in 3 to 5, 3 to 7 years, which is going to add to inventory, which is a good thing for home buyers, right? But what usually happens with big assets is people bundle them up and then they sell the bundle all at once so they can get done with that thing at some sort of a future discount, right? The question is like, who's going to buy these ginormous bundles and with what currency, right? And so I really think that we're going to see some foreign players in here buying ginormous swaths of either real estate, actual real estate, or security backed by this real estate that's being packaged. And that's the interesting thing to look at is we might be in an environment where we have a country like China or something like that ends up buying big swaths of ownership or stakes in residential real estate all across America within the next decade, which I don't think is a good thing for us. So just, I don't know what to do about that. Look out for it, recognize it, and try to find ways to make sure that you're building good value with hard assets that are likely going to continue to have more demand for them today or in a decade than they do today.
Yep. Brady, do you have Brady's the one that behind the scenes doing the opposite of what I'm doing right now when they're doing their lives. Do you have a question? Do you have a good question?
I'm curious, Barking Shark made a comment about commodities are off the charts right now, but lumber is currently pre-COVID prices. I'm building a house and I can tell you, unfortunately, lumber is not pre-COVID yet. Futures did take a crash. Lumber futures did, but they still have to offload all of what they've bought. Yeah, I'm really curious when commodities are going to start to come back down and when building materials are going to start coming back down, because that plays a huge role in, how many homes people can pump out. And it's just, it's making the homes more expensive for the builder and for the buyer. That's what I'm going to keep my eye on.
And that probably has a lot to do with gas. And as long as gas prices are high, my guess is commodities and lumber and just the cost to get things to where they need to be are going to continue to be.
Well, honestly, this is, I don't know, this might sound kind of twisted, but hear me out. It's like, I think that when things happen like this, like when materials are so expensive and they stay expensive for so long, it forces people to get creative because it's just the current way we've been doing things isn't sustainable. Like standard stick-built housing, there are better ways to do things. And so we're forced to think of how else can we do this? How can we build more homes faster and higher quality and save money? How can we do all of those things? And so you're seeing, I follow a lot of people doing like alternative construction, and you're seeing like 3D printed concrete homes take off like nobody's business. Like that is a thing. I watched a video this morning on a house built out of foam. The semi truck full of rigid foam shows up and they built the house out of carved foam. And you're seeing wild things like that that could really be a game changer for like being able to develop communities of housing a lot faster. And so I don't know, I'm kind of thinking like it wouldn't be the end of the world if lumber and some of these materials didn't come back down anytime soon, because we might end up with something better,
Dude, that's such a good point, man, because when we're in a certain environment for a certain period of time, like we've been in a really, really amazingly prosperous real estate and economic environment for the past minimum 5 years, right? Probably more like 5 to 7 years. And I remember I started my businesses right like during / after that last crash, and I was in the real estate market. I remember 2000 would have been the end of 2006, started 2007. I was doing marketing at a mortgage company up in Portland, Oregon. And when I started, everything was rosy. Like the wholesale mortgage guys, they called them the wholesalers before I knew what a real estate wholesaler was, but it was the mortgage wholesaler. They would be driving in, they'd have their Escalades that they had. This one dude, he was like the sharpest dressed guy, really charismatic guy, probably in his mid-20s. He pulls up one day with his fancy Escalade that's got detailed and $100,000 ski boat behind it. He comes in, here's the rate sheet today, schmoozes. Within a year, I remember clearly, and this would have been like I said, 2007, end of 2007, going into 2008. There was about a 2-week period where we saw wholesaler after wholesaler come in there. Hey, I lost my job at Greenpoint Mortgage and we went out of business. Just wanted to let you know. We've had a great relationship with you for 5 years and want to let you know first. We get a call. Hey, this mortgage company out of business. We can't serve you anymore. In a 2-week period, the whole industry changed. And then that's when I got into business. I saw that all happen, firsthand knowledge. And then I'm like, hey, let's start a business in this environment, because I didn't know any better. So ignorance in that is actually bliss, because you're coming in without the crust built up of all the prosperity and got lazy because of the prosperity that happened. And you just come in and go, let me solve this problem. I see opportunity everywhere now. Right. And so that's what I want to make sure I'm protecting against personally myself, is going, okay, I've been the benefit of this prosperity this last X amount of years. I've seen the entire cycle go all the way through when it was hard, and it's still hard, but hard for a different reason, but prosperous, right? And now I'm going, okay, how do I make it so I'm not so locked into opportunity looking this one certain way? So I'm not always looking at opportunity in this way, or I'm not only looking to solve this one problem in this one way, right? Like you were saying, how do we solve inventory? Maybe it's not building stick-built houses. Maybe it's building something else. Maybe it's something completely different we're not even thinking about, right? Maybe everyone moves back in with their grandparents. I don't know what it is, but like we become like the European style, everyone, the family lives together again.
Man, I thought you were going to say the moon with Elon. Could just all go to the moon.
Well, yeah, it is, right? But with everyone listening to this, if you're an agent, investor, or a homeowner, or looking to own a home, whoever you are, there is going to be more opportunity, I feel, this next 5 years that could be transformational for people if you're paying attention to looking at the problems that are being created and that are happening that we're not hearing 3 or 5 years ago, and solving those problems and decoupling yourself from the emotional attachment of what your business currently is and what problem you currently solve. So look for those opportunities, guys. Wealth will be made, but it will not be made by the people who don't change their business model. It will not be made by the people who choose to do things the same way in 3 years as they've been doing for the last 5 years. Those are the people who look back in 15 years and go, man, I don't want to get caught up by the next change, because now I know what not to do. There's gonna be more opportunities. So don't let people scare you into, oh my gosh, what's going to happen when the market shifts or this happens. Things will happen, but there will also be more opportunity than you've probably ever experienced in your life this next decade.
Well, the other interesting thing, like you're talking about, like be willing to shift your business model. I think, like, and correct me if I'm wrong, Trevor, but it's like, as inflation keeps rising and costs are going up, and like life is just generally has gotten so much more expensive in the past few months. It's like everything costs so much more money. And if you're an agent and your commissions are going down, if you can't sell as many homes and your income's going down, then your marketing budget's going down. And so I think more people are going to turn to what we've been preaching for years, which is content marketing, evergreen marketing, like do SEO. And the beauty of doing SEO, and this is for any business, but like the beauty of doing SEO, search engine optimization, video marketing, things like this, is that you don't have to have, hardly any budget to start. You could do it with zero, but you can start with a little budget. And I was going to say, you're going to start seeing more people, but we already have seen more people say, hey, I'm going to finally try SEO. I'm going to do video marketing. I'm going to go on, because you can do it without a budget. So if you have less of a marketing budget, like now's the perfect time to start working on your online marketing.
Dude.
I think we're going to see a lot more
in
of
any
that.
business. It's time instead of money, other than your small fixed costs.
It's amazing that it's still low-hanging fruit. Like Tyler, you and I were talking about this the other day. It's like video marketing, like doing YouTube SEO and getting your videos shown in YouTube in front of people. It's like, it just blows my mind that it's still low-hanging fruit when YouTube is the second largest search engine and it's been out for how many years?
Yep.
And it's free.
And people still don't, we can have this conversation and people be like, oh, that's neat. And then 3 years from now, when YouTube is a little bit more saturated, I'm like, oh, shoot, probably should have got on there. Yeah.
Well, cool. Well, we said we're going to keep it to about 30 minutes. We're a little bit past that. But if you want to check out Carrot, it's real simple, carrot.com. And I'll put in the show notes, I'll put a link over there. And Carrot is the best platform for real estate agents, investors to be up and running quickly. And Trevor and the team, they're awesome. And they've got some awesome insight, and they've been a huge part of me and steering me in the right direction. So I really appreciate it.
Dude, Tyler, I'm pumped to be on here with you, dude. And anytime, man, hit me up, and I'd love to pop on here with you. And it's always fun seeing engagement in the comments section. So I want to give everyone, Barking Shark and Dan Crosby and T Tucker and everyone else, I want to give you guys a shout out, because it makes it, Chris Walden kicked off. It makes it so much more fun when you get people making comments, questions, engagements. So kudos to you guys. Appreciate you guys on it. And Tyler, thanks for the invite, buddy.
Cool, man. Have a good day, and we will be at it again.
Awesome. Thank you, guys.
Thanks, Tyler.
Thanks.
See ya.
Bye.